Hey guys, hope you're all doing well. I'm going to make a long form video here, pretty much just giving an introduction to futures. I've been told by a few people um, that I should maybe do an introduction. So the reason why I hadn't done an introduction was because this page was initially for people that are a little bit more advanced in futures trading and want to understand how markets trade and essentially get better at that. But it was brought to my attention by a few people, Lady Deathwish, Sweet NH, Money Mal, Sneaky Turtle, and more people, that I should just do something kind of explaining at an introductory level. So, just gonna start by going over what exactly futures are. And futures are pretty close to the stock market. I mean, futures are essentially the stock market. Um, and the stock market, futures market, all that self in itself, in themselves are pretty much just trading of commodities. So giving one thing to receive another. And that's pretty much what we see in these markets here. So you can kind of think of trading the stock market like giving somebody $1 for a soda. Both of those things have value, and you want to exchange that value. You obviously want to get a good deal. So it's like similar to, let's say, a house. You want to buy a house at the cheapest price possible and sell it at the highest price, and vice versa. You want to sell the house at the highest price, and next time you buy a house, you want to buy it at the lowest price possible. And that's kind of what we see here in futures. So just to kind of go based off of that, let's say we're buying, we want to buy down here and sell up here. And if we're selling, we want to sell up here and buy it back down here where it's cheaper. Um, so that's kind of, in a nutshell, what futures are. There are different indices. So we've got the S&P 500, which I call ES, and ES is a futures term. But you can see here it says micro E mini S&P 500, and those are the 500 companies, 500 U.S. companies, top U.S. companies that are kind of comprised into one index. And the average of those 500 companies is how we arrive at this number here, this 5,789. We also have the NASDAQ 100. I call that NQ, and that's the futures term NQ just because that's the ticker symbol. So you can see here micro E mini NASDAQ 100 futures. And lastly, we have the Dow, which is um, kind of old school. That's more industrial type businesses, McDonald's, Home Depot, things of that sort, and we call that YM in futures. And you can see here it says E mini Dow futures. I primarily trade the NQ, and I primarily trade that just because it moves a little more quickly than the others. And although it moves a little quicker than the others, each tick is worth a little less. So it moves a little faster so that I can kind of get a larger payout if things move. But at the same time, it's a little safer because every little fluctuation is only worth, it's worth less. And I typically trade contracts. So each handle, so what I mean by a handle is we see here the current price that I'm hovering on is 390. From 390 to 391 is one handle. That's going to be $2 on one contract. Um, So that's kind of how that works there. And I can go over that more in depth. Of course, I want you guys to comment and let me know if you have any more questions. But I'm going to do kind of a higher level introductory video here just because I don't want it to be too long. And I also don't want to bog you guys down too much on like something introductory. I want to put it out there so that the people who know what's going on already can kind of just skip through it. But those who have questions and want to dig deeper into it can let me know. So that's pretty much an introduction to what futures are. Um, Futures, are moving pretty much all day, every day, whereas the stock market is open from 9:30 to 4 p.m., I believe. But the futures market is open from 5 p.m. Or 6 p.m. until 5 p.m. the next day. So it's open pretty much 23 hours a day, whereas the stock market is open, I believe, about 8 hours. Might be a little off on that, 7.5 hours or something of the sort. And pretty much what the market is usually doing is seeking liquidity. So again, not to get too far into this, but we'll call this buy side liquidity. So this little high up here, this little wick up here, and we can see that price sought to go above this, and then it kind of wilted down. And we have a similar thing going on the other side. This is sell side liquidity. So this little wick down here, and price came down here, took that out, and then touched it. I'm not going to go too much into that, but price is always seeking inefficiency or, yeah, inefficiencies in liquidity. So that's pretty much why markets move. Not really buying and selling pressure so much. And we do have market events, like we do have news events every day. So, for instance, tomorrow we've got a few things going on at 8:15. We have this non-farm employment change number, and price will typically move based off of that, but that's not really a buying or selling pressure thing. Those moves are usually usually determined before this is released. Um, but once that news embargo lifts, price will start to move and show us what's going on there. And I think that's pretty. It's not a ton, but I think that should be enough for now. I'm not sure what you guys will need. So again, let me know in the comments. But now I'm just gonna kind of replay price here from today to go over what you're seeing in my trades when I post videos. So um, just gonna move this speed here. I'm gonna move up to 15 seconds here. So when I'm doing a video, I'm usually going long or short. Um, Long means I believe the market is going to go up. So I will buy in anticipation of price going up. And obviously, if I buy and price goes up, and I'll do a little example in a second, but if I buy and price goes up, the number will be green inside of a blue box. And if I think price is going lower, I'm going to be short, which means I'll hit the sell button because I think it's going lower, and then I'll buy it back at a better price. Um, so I'm just going to play price here just a little bit, and I'll pause things just to kind of show you guys what's going on here. But this is price action from today, and price won't look like this normally. It's just like this because it's in this replay mode, which isn't the best. Let's speed this up a little bit here. So I'm gonna wait for a good time to take a long entry and show you guys what that looks like, what that means. I'm not really going to go over entry models or methods here, but I'm more so kind of giving an explanation as to what you're seeing when I'm making the videos or posting the videos that I make of my live trades. So let's see. All right. And there are different time frames. I didn't really explain that, but you can trade on different time frames. Price is fractal. Um, and I'm not going to go over that too much, but price is fractal. So whatever price is doing on the 15-second, it's likely doing on the 1 minute chart. Um, and likely doing, well, not likely, is doing on the 5 minute chart, and so on and so forth. So because price is fractal, it's pretty much going to be doing the same thing on the different time frames. But for me, the 15-second is a time frame that I trade because it kind of shows me what's going on at a deeper level, but also faster. So that allows me to take trades that aren't super long. And because they aren't super long, that means there's less risk that I put on. So I'm going to go over an example of a long trade here. So I'm just going to slow this down a little bit so you guys can see it a little bit better. But again, if I'm going to take a long trade, what I'm going to do is click the buy button here. Um, so if I'm taking a long trade, that means I think price is going up. And we can see here that as price is going up, this is green, and this is kind of going further into profit. And I'm just letting this run out for a little bit. So again, this is the micro contract. So every candle, let's say from 190 to 191, is $2. And I'll just speed this up a little bit. So you can see here still, as price is going up, this remains green. And we bought lower, so obviously the goal is to sell higher. All right, so I'm just gonna close this up now. All right, just gonna speed this up a bit and get into another one to show you guys what it looks like if I was to take a losing trade. Um, so if I was to take a long trade when the market is actually going down, I'm going to show you guys what that looks like. All right. So here we go. I'm going to take a long trade here. Um, so you can see it's in profit right now. It's green. Let's speed it up a little bit. So it's in profit, it's green, and look, now it's red. So I took a trade just now thinking that it's going to go higher, but in fact it is going lower. So because I'm incorrect, price is red here. All right. So I'm going to show you guys on the flip side, if I was to sell, what that would look like. So I'm going to do a bad sell right now first. So I'm going to play this. So we can see, first off, I'll say that the sell button is red. So this is red. But inside of this number is red, which means I'm on the wrong side of the trade and it's negative. So continue playing that. Um, so very much not in profit. And that's why that remains red there. And I'll let this continue to play out. So very much red all around. If this was a good short, so if I thought we were going lower and I took a trade thinking price was going lower, this in here would be green. So I'll show an example of that in just a second here. And these examples are all with one contract on. All right. So I'm going to take a short. So this is going to be a good short. I think price is going to go lower here. So no, or yeah, because I believe price is going to go lower. I'm going to sell short here. So we'll watch that play out. And here's the profit and loss right there. Oh, I can speed this up. Okay, so you can see that um, because price is indeed going lower, this is green and the dollar amount is going up. So there's an example of a short. Um, so yeah, I think that is probably a good enough start. Again, I said I was going to do very high level, not go very far in depth, because if you guys have questions, I want you to be able to ask specific questions so that I can address them. But this video was just a super short introduction to kind of explain what you guys are looking at in the videos, kind of explain what futures are. Um, and yeah, I think that's pretty much it. So you guys let me know if you have any more questions, what you'd like to see or what you'd like to learn that I didn't address here, and I'll get back to you. So happy trading. Good luck out there. Be safe.